So we're now going to move on to another perspective looking at financing options. We've had panels that talk about it from a corporate perspective, from the bank's perspective. We're now going to look very much from the project finance side. To help me do this, we have Nicolau Gaeta, the CFO of Porto Sudeste, and Luis de Vella, I apologize for my pronunciations, I'm sorry.
Perfect.
Thank you, of Devimar. Both Luis and Nicolau are coming from the perspective of being CFOs of large project finances, albeit with very different dynamics, some similarities and perhaps some differences. Can I start with the big picture, so Nicolau? What does it take to get an infrastructure project to a position to where it's able to be financed? And then from your perspective, what's available there in terms of infrastructure finance?
Good morning, everybody. First of all, my particular project, just to say a few words, is a bulk solids iron ore export port near Rio, with capacity to export 50 million tons. And the construction started in 2009, went operational in 2015. I've been there about 3 years. So we've gone through all of the phases, the feasibility, construction, and now operating and growing. So if I think about the, let's say, what does it take to get a project financed in the first place, we need to have, let's say, the operator itself, a very competent operator that brings the technical solution, the solutions to the social issues and the environmental issues, and around that is regulatory as a category. Those are substantial. In the Brazilian market, it's especially substantial. Let's say the level of oversight by governmental agencies and the extensive social and environmental obligations that a project has. So that itself not only is high on the investment side, but again on the level of expertise to actually bring a project to make it operational in the first place. So all of these I would sum up as being, let's say, the operator responsibility that will make it happen. The second part, leg of the stool, of a three-legged stool, is the commercial partner. It's all well and good what you're going to be producing in terms of infrastructure, but who's going to actually use it and buy it, and how much are they going to pay for it, and over how much time, and how predictable are those cash flows? So the commercial partner or partners associated with a project is also critical. And one doesn't work without the other. Given, let's say, high quality operator with a good track record and, let's say, reasonably predictable cash flows associated with the commercial, then one can go after financing and be the third part of the stool.
Okay. Luis, I assume you're going to agree with the competent operator, the commercial partner.
Oh, yeah.
Tell me then about the financing aspects.
Well, for us, it's a bit different. I work with one of these new PPPs in Colombia on road projects, the famous 4G initiatives. So these work pretty much the same, or they were intended to work the same or very similar to the European PPPs. Of course, sizes are different, but the tenors are very similar, 25 years, and this is mostly to build roads. The whole initiative is around 25 billion US in the next 5 years. So in our case, I would say it's kind of a plain vanilla type of project finance for a road project. However, environmental and social issues, the same as in Brazil, are very tough. And this is something that if any of your banks will be interested at some point to knock on those doors down there for PPPs, you gotta make sure that whoever is behind the project, either sponsors or the concessionaire itself, has a very sound and then properly structured environmental and social management, because that's vital. And how we've seen in the mortality rate so far of these projects that began in 2015, most of them are starting to lose blood because of social and environmental. The rest is pretty much plain vanilla on project finance, where of course banks are very important.
So then, yeah, okay, let's understand the project finance and the corporate loans and the alternatives in terms of the different phases of the product, the operational, the different covenants, the different security packages.
Okay,
How do you look at this?
that's a very good question. Very good. Now, in the phase where these projects are right now, which is mostly greenfield or under construction, the requirements in terms of collaterals and again social and environmental are I think paramount, and those are the most important pieces to have working there. However, if one goes and projects the projects in maybe 4 or 5 years, when the refinancing opportunities will open up, this is a totally different ballgame. And this is certainly one. The requirements will definitely be more commercial than legal, and I guess participation from risk-averse banks will be welcome in that case.
Okay.
Yeah, I would just complement that having gone through a project from the construction phase to launch and operational, is that on the one hand, the level of, let's say, technical risk goes down once you launch the project, doesn't go away. You need to take steps to maintain your operational permits ongoing. From the financing perspective, we have also participated in BNDES financing with on-lending arrangements as part of the overall project financing. And let's say when you get to the so-called completion status, which isn't when the construction is finished or when you launch, it's actually a few years down the road when you have a certain level of volume, or whatever the criteria are to define completion status. But that's when the lender defines that the risk level has gone down substantially, and they'll release a level of the security package or modify the covenants accordingly, and will permit other types, the borrower to do other types of borrowing outside without requiring their permission. So ability to operate a lot more freely comes in after completion.
And is the decision of when to go from the first phase to the second phase in terms of financing, is that driven by need for covenant flexibility? Is it driven by pricing, by term, who you're dealing with?
Well, you're going to get there naturally as you grow. So you don't have a lot of choice. So you're getting, let's say, the money up front in the project financing. You have the funding up front. Should you need to refinance, that's a different story. But yeah, I think borrowers would wish to have a lot more flexibility in finding, let's say, more attractive financing options if they find those in the market. But this flexibility is very challenged during once you're not at the completion stage. You need to get to the completion stage and to have a lot more flexibility.
Okay. What you're in an earlier stage in the cycle.
Right.
What kind of covenants and how restrictive are they? And do you compare development banks, commercial banks, bond market in terms of what the covenants are?
That's a dangerous question because I'm in front of a lot of bankers, and most covenants actually you're the creative ones who come up with that. But again, what we've seen so far in terms of finance structure, covenants again, I think in my view they're pretty straightforward. And this is again because this is PPP. You guys have a different challenge because you go totally against market risk. In our case, we have an 80-20 ratio of income coming 80 directly from payouts from the government, 20% total collection. So at the end of the day, the covenants usually, of course, are related to how much risk are the banks willing to take. And in our case, they've been again quite straightforward somehow. Unfortunately, as with any big initiative in terms of infrastructure in Latin America, when you're not the first one, you will always have to face the consequences of the scandals that arise as these initiatives go forward. And Colombia, of course, has not been exempt of these. We had a couple of huge scandals, one involving Odebrecht, who I believe is sounding all around Latin America. And whenever that happens, of course, banks just come up with new creative ideas of covenants and new wordings for the contracts. The lawyers make a lot of money. You're welcome, by the way. And so this, of course, makes you develop a capacity to improvise and sometimes look the other way and carry on with a contract. More so if you're right in the stage of financial close where we are.
On that, you say 20% toll, 80% from the
Yes,
government.
sir. Yep.
So the government flows, given the changes in regime that we see in many countries, there's a busy election cycle, given the corruption scandals that there have been in so many cases, that government flow, is that, how confident are you that government flow isn't going to be rescinded?
Let me look at my crystal ball and see.
Well, okay,
right?
this is a general, I can't comment, but
No, but I see your question.
how do banks think about that?
Well,
risk?
I can't defend Colombia this way. Colombia has not defaulted on any sovereign obligation the past 85 years, right? And that track record, and I know there's a bunch of frowns and lifting up the eyebrow, but it is true. Colombia has not defaulted on their sovereign obligations in almost the past century. So I can only use that to defend that the flows are certain, and since they are already pledged flows coming out of the national treasury, these have gone through very thorough processes that go through the ministries and the Ministry of Finance specifically. So whenever the government pledges these future flows, we are all confident that they are going to happen. So for the banks at the end, they're facing a very reasonable sovereign risk. We're still investment grade, so that's pretty much how we see those flows coming forward. And again, they're not too long. The tenor of flows is distributed in the next 17 years. So we're not talking about this 30, 40 years creative tenors, just 15, 16, which is not bad.
Okay. And then in that 80-20 split, I know that there are problems with toll roads in Colombia. People don't like the tolls. No one likes the tolls, but
Who
maybe
does?
maybe take it to the next level of not paying it.
Yeah.
Evasion techniques. Does the government then make whole that? Are you relying on the goodwill of the government to say, okay, keep it financeable?
Well, in terms of the risk with collecting tolls, we're not seeing so much that the people are not willing to pay, because at the end, Colombia was behind in terms of infrastructure 50, 60 years. So we're not having a network where there are competing roads, public and private. At the end, we're opening up new frontiers here. So the only options will be these new roads. So the possibility of not paying those tolls is very low. However, there is a risk of the economy having cycles and hence your toll collection dropping.
Down, yeah.
That's where the government activates what's called a DR, and those are guaranteed traffics with a specific level established in the concession contracts, and the government comes in and chips every 8 years wherever you have a default or this is a shortfall in terms of collection. So you have your flows are perfectly known since the beginning.
Nicola, I guess you don't have that because you're depending on entirely commercial flows and bauxite exports. So let me ask you a different question. It's 2009, I think you said that you started the project and you moved to the new phase. Let's say it's 2019. How would the finance package change if you were to do it tomorrow to how it to when you did do it?
Okay, well, it's completely different. I guess let's think about, because what will be the same? I mean, the concept of a project finance versus a corporate loan, I think is still a valid one, is still a sound one. There would be a preference for specific project finance to ring fence the collateral and to ensure that the cash flows flow through a waterfall type structure, paying the senior lenders according to the appropriate sequence. So structurally, in that sense, it's the same. But when I think about the access to capital, what's changed? It's first the access to what we heard some of yesterday from Eliane and Benedesi, say financing, the amount of financing, and the preference, their change of strategy to support investment funds and not just be the primary lender. So that's a fundamental change.
Support rather than lend.
Right,
Yep.
right. The other part is I would say that the dollar and the LIBOR interest rates also substantially have changed. So if I think about the original package that was obtained in the early part of the construction, in the period of 2011 and 12 particularly, the company was able to obtain dollar financing, and not just from let's say foreign banks in Europe at let's say LIBOR rates, and then with a spread in the 3 to 4% range, but also Brazilian banks were able to obtain cheap dollar financing to lend to a project such as ours, and that totally changed with the loss of investment grade. So that's a fundamental change, let's say, to Brazilian lenders being able to obtain such cheap dollar financing. Also, we've got the general increases of interest rates, and the fact that investment grade is lost means that the financing that we obtained from European banks and also through an ECA at attractive interest rates, the guarantees required for that type of financing today are different than they were in those days. So, for example, on top of the security package, whether it's a first lien or a second lien security package, it would not be unusual to require financial guarantees. But the financial guarantees are normally from an investment grade institution. So the moment that we've lost that, as we have in Brazil.
So that's ECA's demanding that.
Yes,
yeah.
yes. So losing, let's say losing the investment grade means that we're not easily going to be able to find another party to provide a financial guarantee in the local market that has an adequate status. In fact, you won't find. So then you're back to finding another solution. So there's a series of complicating factors. One, so I mentioned, I think, interest rates being different. I mentioned the financing being less available, and then the third thing is the nature of the security package changes as well. So all three factors, and on top of that, I'd say one other factor, which is the fact that we have a financing that includes a project bond issued prior to the project, say during the construction itself, with a fixed and a variable remuneration component, but long term. So if I think about the environment, what it was then versus what it is now, in terms of the economy and how optimistic it was in 2012 versus today, it's also completely different, because that bond, for example, is also subscribed to investors from outside Brazil, and that would be I think much more challenging today.
That raises lots of questions. Thank you. Let me just pick up on a couple of them. I think one is your comment about development banks supporting rather than lending. We hear an enormous amount from development banks about additionality, co-investors, about being anchoring and trying to leverage in private sector finance. But you don't hear it from your perspective so much. How does that feel from your side? Do they have the commercial banks coming in demanding different things, different due diligence process, different?
Well, they ultimately, let's say the global banks and borrowing from global banks is viable, but depending upon also who the project sponsors are and the relationships they have to the global banks, and whether or not they have a track record of success with them with comparable projects, whether it's in the same country or in a different country, that to be, in order to encourage them to participate and to take some level of risk associated with that. So who the sponsors are is important, and I think that we should speak a little bit about let's say the financing, the global banks, and in the case of a project, let's say of an exporter, like what we are, of exporting commodities, our long-term revenue flows are in dollars. So really the financing ideally should be in dollars as well, and then with lower interest rates associated with that. But it's not always available, or not without substantial guarantees, security package plus financial guarantees, and so our financing ends up being a mixture of BNDES with on lending in reais and also dollar financing.
Okay. Nico, can I Lewis mentioned, sorry, Lewis, Nicola mentioned there about Brazilian banks having less access to dollars, and this is one of the changes over the last 10 years. After this session, after the coffee, we're going to be speaking to Clemente Della Valle. No relation?
No relation
okay.
whatsoever.
I know that one of the things that they've championed is providing credit lines to foreign lenders in peso, domestically, in order to overcome that problem. And is that relevant to you? Do you see that currency, and what is your general approach to having to hedge between the two currencies?
Well, let me begin by saying that the Colombian market is quite small. I mean, although being this the third or fourth economy in Latin America, our banking sector is on the kind of small side. For instance, Itaú from Brazil is bigger than the whole Colombian financial sector. So in terms of dimension, it's a very limited, limited industry. And when the whole initiative was put out in the market, which added around 60 trillion Colombian peso, of course the local market was not prepared to handle that. So so the country needs, of course, the funds coming in from the outside, mainly US dollars. And FDN, which is the Colombian Development Bank, came up with this, I think it's a brilliant idea, of having a credit line that swaps currencies, US dollar for peso, hence making available local currency for the projects, but allowing the input, or at least the source of those funds is coming from you and your colleagues. That has dramatically changed the availability, because it wasn't at the beginning that they came up with that idea. It's kind of a 2-year-old initiative, and it's dramatically changed the availability. As a matter of fact, commercial local banks are out of the initiative. They're not funding new PPPs right now, because it's all being covered. It's all the foreign banks coming in and using FDN as a vehicle to do so. And that really, again, has been very helpful. Okay. And we are using, for around $500 million, we're using those credit lines.
And then in commercial swaps, what's the commercial swap market like for peso dollar? How far can you go out, and what kind of, does it come liquid?
This is also, it allows me to scold your colleagues from FX, because very limited. I mean, when we need on project finance 15, 16-year tenors, we're finding the best swap maybe 8, 9 years, and very expensive, by the way. So this mismatch, now we have 40% of our income is US dollar indexed, meaning that we're trying to have that natural hedge with that 40%, and so we're not in trouble. But other projects that have a lower US dollar component coming in from the government, or where it just had no other alternative but to go to foreign markets, They are having trouble trying to find some decent hedgings that don't leave them hanging out to dry right in the middle of the tenor in 8 years from now. It's still a challenge. Now, World Bank hasn't offered something for 15 years, but that's very specific.
Okay. So say 40% of the revenue is dollar index. This is the
Yes, sir.
governmental flows, and 60%
It's
domestically.
Colombian peso, right?
And then would that match your overall exposure on the
Okay,
other
well,
side of the balance sheet?
okay, very good. Now, we have the fortune of not having a large imported component in terms of input for construction. So we're not mismatching our outflows with our inflows in that sense, at least in terms of construction. So that first risk was already taken out of the project. Now we are, of course, since it will be always be cheaper to find financing outside, that 40% establishes a cap for a natural hedge to go and optimize our funding structure into international markets. So that's pretty much what we did with that.
Okay. Okay. So your dollar revenues? or
Right,
dollar-linked
right.
revenues?
So there, the swap that would be of interest to us at some point would be to convert, let's say, a variable the BRL component of the financing into dollar and from variable rate to fixed rate. That would be of interest. However, only when there's certainty as to the long-term payment flows, because it's 15-year financing, 12 years to go, and the next couple of years it depends upon our ramp-up rate. There is a level of unpredictability in terms of the payment cash flows of let's say for the repayment of principal and interest, and in terms of the timing, and therefore in that certainty, I need to have a lot more confidence and to have that certainty before thinking about such a swap instrument, not to have a mismatch with the reality of the repayment requirements.
Aliona yesterday spoke about BNDES's objective of adding local capital market development to her objective, and you mentioned about the very small size of the domestic capital market. Question for both of you, are we seeing progress and in terms of the ability of the local capital market to get greater tenors, better sophistication, and what can be done? And does BNDES, I don't know if Eliana's still here, you seeing the fruits of that objective?
I think that the idea of, let's say, the nature of their financing, of where they're focusing in on, is on the one hand innovation, so interesting projects and renewable energy projects. On the other hand, it's also stronger governance with all of the government monies, which is also important. So that's helpful. Absolutely, but then I think it's sector specific. So there are going to be more, I would say, national sectors. You have these the concept of national champions of supporting one company or one individual. So there was that notion a few years ago, and now it's more specific sectors. But that's important, I think, because you don't have money to support everything. So the idea, I think the idea makes a lot of sense. Absolutely.
Improving governance. Yeah.
Sorry, I got to say, like with everything else, Brazil is always two steps ahead. And in our case, we have seen nothing that really can even suggest that the local capital markets are finding some new developments coming out of these initiatives or anything. Not at all. There's been a couple of issuances but both of them in New York City, and some old bonds coming in from old PPPs back from the 90s that really soured. So at least in our case, capital markets locally have not felt anything in terms of having this tailwind helping out of coming money from the government, or
It's but it's still a bit early. And then the more, I think, the more fundamental problems, I think, of the Brazilian, let's say, banking sector is that there's a high concentration of players, of really five strong players. So the overall, so it's not as competitive a market as it should be. And that doesn't help interest rates, but I think that there's now a certain amount of political forces with the election, that several of the candidates are talking about a level of deregulation, or let's say tax or different levels of tax incentives around those which are a bit more innovators, or that move towards lower interest rates. So something on the tax side and some level of deregulation, I think will help. But today it isn't really ultimately a very competitive market, from the sense of not too many players are there, and capital flows and dollar capital flows are complicated for funds to flow in and out of the country. So it's a long way from where it should be.
you guys do have a foreign exchange regulation that it's exemplary.
Yeah.
It's very complicated. Yeah,
Yeah.
it is. It does.
Yeah, exactly. That regulation is specifically compared to some other countries, which I think are more, in that sense, bigger innovators, like Uruguay, with the free capital flows that it has.
In Peru as well.
Or moving towards a concept that you see much more typical in Asian economies. So there's a long way to go, I think, in this area of deregulation that ultimately is going to help become more competitive, which is going to attract, I think, more financial institutions to the market and be better for us as the borrower.
Okay. I have one more question I'd like to ask you both. Before I do ask that question, though, do we have any questions from the audience? Your opportunity. No? Okay. In that case, I'm going to I'll ask my final question. You have a room full of lenders here, lots of bankers. This is your opportunity. What's your message?
Well, I should say if your banks didn't make it to the first kind of wave in these PPPs for Colombia, and I certainly hope that you are somehow familiarized with what's going on down there. I would suggest that there's a couple of windows that will open between next year and perhaps maybe 5 or 6 years down the road. First one is going back to this mortality rate that I spoke about. Maybe at the end, 10-12% of the projects will have to reaccommodate or find a new way, and that will create kind of like a second-hand market of these large projects. I really would suggest that you guys study these projects because, of course, as they require some kind of adjustment, they will have leaner conditions. Perhaps the contracts will be a bit also more clear, and those should be attractive. And definitely the refinancing frenzy that will happen in around 6-7 years. Not everybody will go with bonds. Having some corporate loans there are important. It will be very important. I'm sorry. And also in terms of corporate, look for the sponsors behind the projects. The equity requirements for these projects are huge for the size of the market, and having some good friendly banks behind securing at least or giving a hand to these to the sponsors, more than one will have it welcome.
Okay. Final word. What do you want to tell these people?
Yeah, I would say, supporting what we heard also from this previous speaker regarding the significant pent-up demand in the Brazilian market and for infrastructure, tends to view the situation a bit more optimistically and good, let's say, opportunities for investment in the Brazilian market, because irrespective of the political candidate, given demand, given the borrowing capacity as well, and I would say the political forces supportive of growth, and deregulation. So be encouraged to really watch that space for opportunities closely post election period.
Fantastic. Good message to end on. Thank you very much.